So let's have a look at this exam style question. So in your exam, you're going to have a question where you're going to have to do something like this. Now, it may not be a compulsory question, so you might be able to avoid it, but it is a nice little question. It's quite a nice topic area to have a go at. I mean, this example's 15 marks. Again, it might be slightly more, slightly less, but at least it gives you an idea of the style. So what we'll be asking you to do is to calculate a person's capital gains tax and state the due date for payment. And what we've got here is a number of scenarios for this person, and for each one you've got to work out whether there's a gain and what you're going to do with it. So if we start at the top, then we've got an antique piano. So an antique piano is an example of a chattel, tangible movable property. So you've got to think about what your chattel rules are. So for the piano, we've got proceeds of 12.5, and we've got cost of 7.5. So the first thing you'd probably ask yourself, is it going to be exempt? Well, it's not exempt because you didn't buy and sell it for less than 6,000, and it's not a wasting chattel. An antique would be considered to survive more than 50 years. So in this example, we make a gain of 5,300. I'm going to carry that across to the total column so we can see in the summary what we've got. If we look at B, we sell a painting. A painting is another example of a chattel. So we sell the painting for 5,000, and we've got costs of, what have we got? The painting costs 7,600, and we've got auctioneer fees of 2%, and it will be 2% of whatever you sell it for. So 2% of 5,000 gives me 100. Now this is another chattel. It's not exempt because you bought it for more than 6,000, but what we do have here is a loss. So if you think about that table for losses for your chattels, if you make a loss on a chattel and you sell it for less than 6,000, the proceeds are deemed to be 6,000. So the loss is restricted, and that gives me a restricted loss of 1,700. For C, we sell a classic sports car. Now, it doesn't actually matter what type of car it is. The car itself is exempt, but you must say in your answer that that's how you're treating it. So don't just ignore it, say that's what you're doing with it. But if we read a little bit further, in the last sentence it says you've got a number plate, and a number plate is chargeable. So although the sports car is exempt, the plate isn't, I should say. So proceeds 800, original cost is 300. And that gives me a gain of 1,500. Okay, so we're looking at each item and trying to make a decision of what we're going to be doing to deal with it. For D then, we sell some land. Now I expect you to see the word land and immediately start thinking about a part disposal, because that's likely what the question's going to be all about. It's a typical example of a part disposal. And that's exactly what's happening here. So she sells some land. The original land cost 30,000 for 12 acres, and the bit that she's selling is only 8 acres. So we've got land, and we've got proceeds of, what did we have there? Proceeds, the part she sells was sold for 60. And we need to work out the cost. So the cost of the whole of the land, so original cost was 30,000. So I want a proportion of that times by A over A plus B. So remember what that means. A is the proceeds of the bit you're selling, which is the 60. And B is the value of what's remaining. So the bit that I'm selling, I sell it for 60, and the bit that's left is worth 90. So the market value of what you have for the whole of the land at this point in time is 150,000. So 30 times 60 over 150, and that gives me a proportionate cost of 12. And that gives me a gain of 48,000. So you just keep carrying your gain across to the total column. If you get one of these that you can't do, just keep going or have a go at it. Even if you just put proceeds and costs, you might possibly pick up some marks for something. Obviously, we'd like you to do it correctly. E, she sells her own home, which has been her main residence. Now, normally, your main residence would be exempt, wouldn't it? The only time it isn't exempt is if you rent it out or use part of it for business use, and that's what we've got here. Now, here it gives us the gain, so we haven't got to work out the gain, but it just tells us 10% has been used for business, so that part of the gain will be chargeable. So let's write that down. So we've got gain of 40, exempt, exempt 90%, and chargeable is the 10%. So I pay tax on 4 because that element of my house has been used for business purposes. And the final one we've got then, some antique furniture. So it's another chattel that we're dealing with. We bought it originally for 5,900. We're selling it for 10, and the cost to buy were 100. So straightforward gain calculation for the furniture. Proceeds and cost. So the gain on the furniture is 4,000 as well. Now, before you finish off the furniture, remember it's a chattel. It's not exempt because you sell it for more than 6. All right, you're not making a loss, so I don't need to restrict any losses. But you do need to restrict the gain because the cost, and it's the actual cost of the asset, not the total cost, is less than 6,000. So you're going to do that test as the maximum 5/3 of your proceeds minus 6,000. If we do that, we come out with a calculation of 6,667. So I'm going to stick with my original gain because it's still less than the maximum. But always show that you've done that test because it's showing that you've recognised that you do have to do something special with it because it's a chattel. So there will be marks for doing that. So we've looked at all our assets. You will add them all together. Obviously in the exam you might have made a mistake for one of them, so you might not have the correct total of 61,100, but add up what you've got. And then you're looking at your question to see, do I have any losses brought forward to use? And do I have an annual exemption? So if we go over to the question, we do have some losses. Capital losses brought forward, 4,500. So we're going to deduct them. And the annual exemption is 12. So the amount that's now going to be chargeable for tax will be 44,600, and we need to work out the capital gains tax on that. Okay, right, what rate of tax we pay then? So let's have a little look. It says Laura has got taxable income of 28,000, so that means after personal allowances. So think about that band again, 37.5. She's used 28,000 of it for income tax. That bit has gone. So whatever's got left, she's allowed to use for capital gains tax. So she actually has 9,500 left. So that means her proportion of her gain can be taxed at the lower rate of tax, which is 10%. So 9.5 is at 10%. That gives me 950. And the rest of the 44,600, which leaves me with 35,100, will be taxed at 20%. So in total, I've got tax of 7,970. All right, in an exam, if you've got that wrong, but you work out the band and you work out your own figures down here, you'll be given credit. So the main thing with these questions is not to give up and think, oh, well, that's wrong, there's no point carrying on, because there will be their own figure marks. And the last bit of the question, they ask us what is the due date. So due date, remember, is in full January 21. Right, you're always being asked about 1920 tax year, so the payment will be in January 21. Now, what I want to finish off with before we close this chapter is considering the marking scheme, because I think it's good to get in your head early on what the marking scheme is. So you can see as you're doing these questions that actually there's lots of easy marks to pick up. So this was a 15 marker. So there was 1 mark available for the first one because it was just a straightforward proceeds and costs. There wasn't really any way you could go wrong on it. But there were 2 marks for the second one. So it was 1 mark for knowing about restricting the proceeds, and then half a mark for each of the costs that you put in correctly. For the car, half a mark for knowing that was exempt, and half a mark for knowing that you got to tax the number plate. So if you didn't know about the number plate, you said it was all exempt, you'd have still got half of it right. For the land, this is slightly more complicated, and that was 2 marks. So that would be proportionately reduced depending on what mistakes you've made with your formula. For your house, it was 1 mark for knowing that 10% of it was chargeable. And then the biggest marks were on the furniture. So we had half for each of the first bit, working out the actual gain. And then there was 1 mark for knowing about that test. So if you didn't do the test, you would at least still get 1.5 by getting the correct 4,000. And then we've got an easy mark for knowing that losses brought forward reduce the gain, and an easy half a mark for knowing about the annual exemption. Finally, we've got the tax calculation. So there was 1 mark for knowing that you use the rest of the basic rate band, and then using your own figures, multiplying them through to get the tax charge. Finally, that leaves us 1 mark for the due date. So the best advice I can give you on capital gains tax is just to keep practicing the questions that you've got. So there's a few in that chapter I've not gone through that you've got all your model answers on Moodle that you can look at. If you listen to anything on this recording and you're not happy with it, or you want clarification, then please put something in the forum and we'll help you out, but make it clear what question or what page you're looking at when you ask your questions.